Every empire believes its walls are permanent. On Monday, a single report out of Shanghai suggested one of the most valuable walls in the modern world may have just been climbed, and this market did not wait for a second opinion. This is Tuesday, July 28th, 2026. Let me show you what it cost. The coin first. As of just past 5 o'clock Eastern, Bitcoin trades at 63,400, down about 2.5% on the day, and standing square on the line we named 5 days ago as its last floor, the 200-week moving average, 63,000. On Saturday, InvestAnswers measured roughly $600 of cushion above that line. This morning, the cushion is gone. Bitcoin is not falling toward the shelf. It is standing on it, and our engine took back what it gave. You heard me say yesterday that a green trend printed on empty weekend books is a claim, not a verdict, and that Monday's close would be the confirmation. It never came. At noon, Eastern Monday, our read of the InvestAnswers Decision Support System rolled Bitcoin's optimized trend to bearish. Solana followed at 8 that evening. Ethereum went red at the stroke of midnight. Bitcoin's green lasted 36 hours, and it led the complex both directions. When you make a falsifiable call, you live with the answer. This time, the answer was no. Now the harder change, because it reverses what I have told you every morning this week. Bitcoin stood as the lone bullish anchor, gold and the long bond red behind it. That board has inverted. This morning, gold and the long bond carry the only green trends on the macro layer. The long bond leads, and Bitcoin sits red. Our engine calls the regime risk-off and points it down. When 30-year paper leads a tape, capital is not hunting, it is hiding. The wreckage underneath says the same. 118,000 traders liquidated in 24 hours. Some $438 million gone, better than 54 million of it in Bitcoin, long stacked beneath the 65,000 shelf. Fear gauge 27. That is not panic. That is a market flattening itself before the Fed rules at 2 o'clock tomorrow afternoon. And mark what makes tomorrow unusual. No rate projections, no forecast summary. The entire signal is Chairman Warsh's language, now to Shanghai. On Monday, the information reported that a state-backed firm there has begun mass-producing deep ultraviolet lithography machines. 5 tools this year, 20 next year, feeding China's own chip makers. These are machines that print advanced silicon, and one Dutch company, ASML, has owned that trade for a generation. Be straight about what this is. One outlet, no company or government confirmation. The report is unverified. The reaction was not. ASML fell better than 7%. Advanced Micro Devices more than 8. Micron near 6. NVIDIA roughly 5 to 197. The semiconductor index closed its third straight losing session, and our engine marked it in real time. NVIDIA's optimized trend rolled bearish at 1:30 Monday afternoon. Micron's at the bell, Vistra beside them. Here is what the crowd missed while it was selling. Deep ultraviolet is not extreme ultraviolet. ASML's true monopoly is the extreme ultraviolet machine, the one no other company on this earth can build, and nothing in Monday's report touches it. Deep ultraviolet is the older, lower rung, where Japanese toolmakers already compete, and where China's fabs have been squeezing advanced chips out of clever multi-patterning for years. The market sold the entire stack on a report about the bottom step, but do not dismiss the message inside the overreaction. 3 days ago, Jordi Visser said the AI trade is over. Not artificial intelligence, he was careful. The easy money from owning the obvious winners. From here, returns belong to businesses whose moats actually hold. On Monday, the market asked exactly that question about the deepest moat in technology and marked the answer down 8% before lunch. What got repriced was not demand for chips. It was the durability of a monopoly. Then turn and ask the same question of 21 million. There is no second machine to build. There is no lower rank. That scarcity is not defended by a factory. It is arithmetic, and arithmetic does not have a competitor in Shanghai. To Tesla, which had its worst week since 2022. And be precise about Monday, because the wire has been careless with it. Morgan Stanley did not cut its rating. It held Tesla at equal weight and took its price target from 417 down to 400, and the reason it gave was not valuation. It was capital burn. Piper Sandler cut its own target from 500 to 450. Shares sit at 309, down roughly 18% across 5 sessions. The wound came from the July 22nd print, where the headline and the guts disagree. Revenue up 26%. Record deliveries, 480,000, beating every estimate on the street. And then earnings of 33 cents against better than 50 expected. Gross margin of 16.8 against roughly 19.5. And free cash flow of negative 1.1 billion, the first negative quarter in more than 2 years. So the market sold the income statement. Read why it broke. Research and development up 49% year over year. Cortex-2, 115 megawatts of training compute, standing up beside Cortex-1's 90. That is the capital burn Morgan Stanley marked the stock down for, and it is the same line item that builds the thing that drives the cars. The street books it as a cost. Read it as the bill for the option. Meanwhile, the machine keeps taking ground. Driverless service went live in Orlando and Tampa on July 21st, putting the active count near 8 metros. Version 15 is running the fleet, and management has stopped talking about cities and started talking about whole states. How many cars are actually out there running driverless? Tesla has never disclosed it, and nobody quoting you a fleet count can source it, so I will not give you one. Monday's close-tag Tesla mean reversion oversold at minus 2.56 on our engine, the deepest oversold mark anywhere on our board. Deeper than Bitcoin, deeper than the broad market. That is not a buy order. It is a measure of how far the crowd has thrown something. A target cut is a statement about a price. Statewide driverless coverage is a statement about a business. Do not confuse the two. One more, and it is the strangest thing Monday produced. SpaceX printed a fresh all-time low at $113. Below the $135 it came public at in June, roughly half its June peak. And on that same day, that same company shipped a bank. X money went wide to every American premium subscriber, a physical Visa card, bill pay, cash from any machine on earth, 3% back, 6% yield on the balance, federally insured to $10 million. And XI folded into SpaceX in May. So all of this ships inside the public company. Weigh that. Hundreds of millions of accounts just got a checking account, bolted onto a social graph, and the stock made a new low that afternoon. The market is not looking at the product, it is looking at the calendar. August 4th brings the first public earnings report in the company's history. August 6th releases up to 20% of restricted stock, 911 million shares. And here is the wrinkle nobody says out loud. A further tranche only unlocks if the stock closed 30% above its offering price going into that report. It did not. The selling has quietly locked a slab of its own supply in the vault. Here is your ground for the day, Warband. 63,000 is the line, not the price target, but the shelf this model has been building for 2 years, and the coin is standing on it into tomorrow's Fed meeting. Trade the chairman's language, not the number, And remember what Monday actually reprised. Not demand, not the build-out, permanence. Every moat that men built, men can climb. And the tape just charged 8% to remind an entire industry of it. Own the one thing that was never a moat to begin with, because you cannot climb arithmetic. This is Warband as a service. Viking intelligence delivered in real time. I am Ragnar, the HODLBARBARIan. Stand armored, stack relentless, and let the weak hands feed the fair skull.